All right, we're going to look at tab number 3, calculating on project basis. We start with the total bid expenses. We have 1.7 million of estimated cost, not the bid amount, but what it'll cost us before overhead and markup. Next, we have $200,000 populated for expenses projected that we're going to finance through the line of credit XYZ lender. As we populate the interest rate and expenses per financing method, the red cells will automatically populate and recalculate for you. The goal is to plan the full amount of bid expenses from an estimate to match the total in the cell B5. It's time consuming, but it helps you to have a plan so you can strategize where and how you're going to pay for potential projects. If you aren't sure who you'll use, plug in the higher interest rate numbers so you can cover yourself in case you have to go that route later on. I know estimating is all about slimming down as much as possible to win the low bid, but just because a GC says you're 5% high doesn't mean your number is wrong. It may mean the competition has scope gaps or their historical data, because they use square foot numbers too, is outdated. So trust your process and your team. Looking at the daily costs column, for $200,000 on the line of credit with XYZ lender, the daily cost is $49 to use that line of credit for that dollar amount. For the cash line, think of the 1.67% a month as lost opportunity. It could be the lost opportunity of putting money into stocks and bonds, acquiring new assets, maybe it's a new program or a software you've been eyeing, plus inflation. After all the information is entered, the bottom 5 cells are where the magic happens. Using the orange cell, you can select your customer by name if you named them in the first tab, like we talked about. For ABCGC, this project is estimated at $1.7 million expenses. We plan to use 8 different working capital options, and the daily cost of how we leveraged each option was calculated in column G, adding all of column G. ABCGC with an average DSO of 34 would have a daily cost of $983 to finance this project based on the way we plan to allocate those expenses. That costs us $33,801 to build this project, distributing working capital in this way. That might not seem like a lot, but it adds up if you do it every project. So how do we account for that? Take the bid expenses divided by the estimated cost of financing total, and you get a percent to add to your bid. In this case, use a 1.99% adder to the sum of the bid for the ABCGC's proposal. All right, now say that client number 5 is bidding the same project. Maybe you gave everybody the exact same bid before, but we're going to see why that's a bad idea. The average DSO for client number 5 is 60 days. So just 26 days longer to get paid, or 4 weeks more. That's pretty typical when you have some conflict. And actually 60 days is right in line with how long it typically takes subcontractors to get paid in general. That doesn't seem like a long time, right? The daily cost is the same since it's calculated based on our working capital allocation at the top, but the cost of financing total goes from $33,801 to $59,196. That's an additional 75.1% or $25,395 you will pay in interest and you cannot bill for. The worst part of this whole scenario is the average DSO for a contractor or subcontractors, according to the 2024 Subcontractor Market Report, is actually 57 days. So it's pretty in line with the 60 with client number 5 that we've been using. So for client number 5, you'll need to add 3.48% to account for the cost of financing the job based on that client's historical payment time. This is all data that you've had the whole time, but probably didn't realize it's why your projects estimate to be really profitable, but at tax time, it doesn't look like the company is making much for profit, maybe 1.5%, probably losing. When you think about adding 3.48% to a bid, it may seem like you're never going to win another project again. But with an industry average of 10% overhead and 5% profit on a bid strategy, you are only left with 1.5 net profit after all of that, after everything's paid for, if everything goes according to the general contractor schedule, the engineer and architect's design, and your estimate. There are several ways to add this percentage to your bid, depending on your estimating process and the software. So do what makes sense for your company. But I can't stress this enough. Accounting for the cost of working capital is critically important. So feel free to rewatch this and get it right. 2 action items I want you to do are price out 3 more working capital options to add to your capabilities and request an increase to your credit limits so you can use more of your lucrative options more often.